Hey traders, this is Blake Morrow with Trader Summit. And with me today for the very first time, I have Mr. Peter Pham. He is the founder of Inversion Investor. Welcome, Peter. How are you?
Good. Thanks for having me on for the first time. Love to share everything to the audience. And hello to everyone.
All right. Well, it's nice to have you here. And from what you've told me, you just recently relocated to New York. Tell us a little bit about where you came from and what your experience is in the markets.
Yeah, we'll keep that kind of short because no one really wants to hear long-winded bios. But basically, I've been in equities on the buy side, sell side for basically the last 20 years. Been looking into investing since the dot-com crisis, and always looking to find an edge. So I'm so happy and pleased to be here in New York. I just found out, first off, the location I'm at is where the United States was keeping its gold for in the early like 1900s, and right next to the NYSE, and right next to where George Washington was inaugurated. And I appreciate the history. And even though I'm Canadian, but I appreciate the fact that Washington chose not to be the emperor and king, allowing for the United States to be a republic. And how it's connected to traders is that decision alone has allowed for the exponential growth of the United States and that of the West, including its stock market, which many people have benefited from, irrespective of multiple crashes. You've seen that it's gone up well. So even a buy and hold guy has done good. And that's not necessarily the case in different economies that have adopted different philosophies.
It's a great point. So, tell us a little bit about Inversion Investor and what you do there, and then we're going to talk a little bit about your feelings on current markets and pockets that you see of value. So, tell us a little bit about Inversion Investor.
Sure. So what I'm going to do is I'm going to quickly share my screen because you don't want to hear from me, as I've been trying to say to you. I think the perfect person to hear from is Charlie Munger because he's the one who inspired us to come up with the name Inversion Investor. So I'll just play this clip very quickly for you guys. He provides a secret in one of his
And I've had results in life that are prodigious. And that came from tricks. I just learned a few basic tricks from people like my grandfather. There are all kinds of tricks that I just got into by accident in life. One, I invert all the time. It's like a lot of practical problems in algebra that if you invert, you can solve it easily. If you don't, you can't solve it easily.
Exactly right.
And so, of course, I had that trick very early. And approaching it in reverse that way, I got better results. And I got the right bag of tricks early. And of course, it's been of enormous help to me. You've got to do this in three dimensions. God gave us three dimensions.
So that's the inspiration. That was my introduction to the presentation that I've done in Toronto, New York, Singapore, all around the world. I have a podcast that I've been doing since 2012, learning from like the greats. Jim Rogers has been on my podcast, also a reader of our publication, Inversion Investor. It's free, by the way. I'm not trying to sell anything. Mark Faber, Mark Mobius, all of these guys, Robert Kiyosaki, Ron Paul I've spoke to them. I've done independent research, and all of my time, I've always been trying to identify what really works in the market. And this brilliant gentleman, which I find provides more gems than Buffett does, because Buffett's trying to project that message to the retail guy saying anyone can do it. But if you read deeply into Munger, you'll start to see, wow, this is super clever. And it's connected to philosophies in life. For example, the whole way that the US economy is kind of structured, Blake, is it allows for that level of volatility. If you ever read the headlines in China, for example, and through communism, they promise economic stability. Through central planning, for example, they ensure that the average citizen doesn't need to experience that much economic volatility. In fact, the gentleman that's been on your podcast recently also was discussing with me on a podcast, and we discussed about how one of the attempts is to suck out volatility of the real economy and to only give volatility into financialized assets. But what's brilliant about the West is that it still allows for a little bit more wiggle room. But as days go by, people are gonna become more and more fearful. And what's going to happen is that central planning and larger government, as measured by debt to GDP, is going to have an adverse impact on the market. So when we had the financial crisis, if I could share this, is that when we had the financial crisis in 2008, a retail investor had the ability to apply for much larger bandwidths of leverage. Now, it's dangerous because what people do is they'll say, oh, subprime could get you into the situation of default, for example. But the issue is that for an astute investor that has limited funds, this was his opportunity to be able to try to build some wealth for himself and build a moat for himself. So I always think of things like in life, for example, as if it's dangerous, there's a positive to it. And I think this whole idea of looking for inversions, looking into things that are uncomfortable truths about life is linked to our concern about what's happening in the economy. But the way we protect ourselves, Blake, is to identify the inversions. I just have like a really quick three-step process. Can I show it? It's just like a minute.
Sure.
Yeah. So I have three steps to inversion investing. Okay. Number one, you're going to look for the contrarian. So let me play it. You got to look for contrarian opportunity. Okay. Two negatives make a positive. Then you're looking for activists, either like real activists or you're looking for like passive activists. Passive activists could be retail investors. Passive activists could be people that are protesting a situation somewhere in the world to show that this asset that is a potential investment is being viewed upon as negatively. And then the third point.
You avert a total apocalypse. You restart with the origin. You create a new hierarchy based on the basic elements of what created that thing in the first place.
The third point is then you look for price confirmation because we're not about dogma, Blake. We're looking for basically a contrarian opportunity or an undervalued asset or something that's perceived as having really negative sentiment. Okay. And then what we're looking for is bids or participation towards why they don't like it. It could be people that are trying to ban, let's say, cigarettes, for example. People could be protesting wars, for example. But everyone knows, and I'm not saying it's a positive thing, is that some of those things are stimulative for the, let's say, the economy or the military industrial complex or basically banks, right? People are upset with Nancy Pelosi's portfolio, but irrespective of that, NVIDIA is going up. And I think that is an angle in which an average retail investor can take the things that they're disheartened by because they're not part of something much bigger, but they're able to protect themselves as the world is becoming divided between the rich and the poor. Here's just a very quick visualization of when you use two negatives, you can create the positive.
One thing you can do is you dive back into the origin. You go down into the water, you find that golden ball, that first spark, pull it out of the water, and you start the cycle again.
Here's a quick visualization right here is that when you identify something negative and then you use my three-step criteria, hopefully what happens is then
that characterize financial markets, negative and positive.
Two
negative feedback, he argues, is self-correcting, while positive feedback is self-reinforcing.
You're looking at, depressed multiples, depressed prices, no bids, but then you start to see that flip. And that's the event catalyst that allows for the stock price or the index or the asset price to then truly turn. And by the way, Blake, this is so important, is that this is very much connected to things of basically even the foundations of Western culture, for example, America was founded by capitalism and also Catholicism. And for the audience, irrespective of what one believes, one simply needs to think is that why is there a story about, let's say, a deity that basically loses face through the crucifixion story, for example, if everyone understands that, or if anyone understands the hero's journey, the arc is always like really down and then boom, the ascension. And that's very much connected to how stock prices move and the economy moves. If you think about like a bond or an insurance product, for example, you're not going to get exponential gains because of the fact that it doesn't have the downside volatility. So it's very important to understand the asset and then to understand the features of why the economy works. One very important point that I had said to you, and it was an observation that I recently made, was that for your audience, for example, what they need to find is that they need to find an advantage based on the normality. It's very hard to scale, Blake, identifying the next fad, the next sector trend, to say that one is a stock picker. I mean, it's ad hoc. How do you identify this stock was good based on this XYZ criteria versus what you just did a year ago? You can't scale that. So what you want to find is true edges in the market that happen irrespective if your thesis is correct or not. So I also, what I have right here, I'd love to show the audience, and it's for free, by the way, because I published a book in 2012 using basically simple quantitative analytics. And I put it right here. You can just simply go to the website. I'm not selling you anything. It's for free, right? So I just finished it. I was up all night, by the way. That's why I'm not really formally dressed. This is the first time I'm kind of casually dressed because I stayed up all night. I didn't go home to sleep. So what one does is, because I wanted to share this to everyone for free, by the way, is let's, I don't know, give me a ticker symbol that you're interested in, Blake.
Put in NVIDIA because everybody's looking at it.
The ticker symbol NVID, if I'm not mistaken,
NVDA.
right? NVDA. Okay. So we're going to get a whole bunch of very important statistics. Okay. So I just entered the statistic. Okay. And here's a bunch of very important things. Okay. So what we know about NVIDIA is that more than likely it will close outside of the previous day's high or low 80% of the time. Okay, that's one important statistic. We know that NVIDIA on a daily traded basis will only surpass either its high or its low. It won't surpass both. So now you can start to identify a range. For example, let's say NVIDIA is making a new high today. I suspect it is, right? So basically, if I wanted to do an intraday trade, okay, I could set a stop loss at the low because I know that there's only a 6.6% chance that it will go lower than yesterday's low. And that's how you build a structural advantage around your adverse feelings towards Nancy Pelosi making capital gains off her NVIDIA position. And this is sort of what I've been trying to say. And here's one thing that I created as well is that once you identify the average highs and the average lows, you can do what if scenarios. If NVIDIA goes up 10 cents, for example, what is the probability that it's going to go up 20 cents? Because once you get the new high of the day, which means that you've set your stop loss at the low because it won't happen. It happens only 6% of the time. Now what you're going to do is you can be greedy and you can try to capture in, let's say 20 cents, for example, or a dollar, whatever the number is, and I will be able to provide you the probability of you achieving that. So that's what I mean by literally building a structural edge around any thesis or idea based on the normal market mechanisms of an open, high, low, and close.
That's really interesting that you have that, and that's on inversioninvestor.com. Let me ask you this. This is we're at the Trader Summit, so I want to hear from you what opportunities you see. Give me a couple opportunities, or the audience a couple opportunities that you see currently right now based on your, two negatives, meaning positive.
Yeah. So some of them, so for example, if you just go to like my recent notes and stuff like that, I always share to you like the calls. Again, for free, basically, for the time being, right? Maybe I'll put a paywall. That's a whole nother story. Is I'm not really interested in putting paywalls. If you're really good, you shouldn't be doing this to sell some kind of newsletter. You should be doing this with big AUM. That's my personal opinion. But just to give you an example, oh, by the way, when is this podcast coming out? Is it coming out anytime
It'll
soon?
be out over the weekend. Yeah.
Okay,
and the probably February 10th or 11th.
Okay. So you know what? As I remember when I spoke to you a week ago, right? You had asked for some calls. Okay. So I wrote this article right here, like the market with my blood, sweat, and tears, because that's what I do. Like this is a passion. I don't know if that's conveyed to the audience. I've been doing this for a long time. It's like a jigsaw puzzle I'm trying to solve. So when I spoke to you, you said, hey, we need some calls, right? And then that's why I wrote it. You know, I stuck my neck out, Blake. Okay. So on February the 2nd, I think it was a day or two after we spoke. I can't remember when. Okay. So I'm sitting here on Wall Street. Okay. And then I just write it. I write long dollar. You can still do that, by the way. Neutral Bitcoin, still probably valid. Short China, we'll elaborate more on that. Long Taiwan, long Israel, I'll elaborate on that. And maybe for the audience that's going to see it on the weekend, even though right now it's about like 1 o'clock, is I wrote neutral S&P, but I wrote it in reference to February the 2nd. So only my readers got to see it. And I'm happy about that because my readers are kind of like all like the who's who of Wall Street. So I'm happy they get to see it. And I'm happy if your audience wants to start following these going on a forward basis. So here's the important thing is let's open intraday. Oh, geez, this thing block. Let's open the recent call and I'll elaborate on it a little bit more. So what I have here is, again, you can get this all on the site and it's connected to TradeView, is that the blue line is Taiwan, the orange line is China, and basically the bar chart is the S&P. And the date here is about from the 16th. That's when I started making the call. In fact, I have a seasonality thing I like to share to the audience. And because you guys are in the West, so you're not going to be familiar with it, but literally Chinese New Year just started. I'm sure you guys are familiar with that. But a way to think of the seasonality is the fact that I think some people have heard of this because there's a lot of gold bugs, is what happens is that people need to buy gifts. And the primary gift, for better or for worse, in Chinese New Year, do you know what it is, Blake, by the way? What people give each other?
Gold.
Gold and red envelopes. Are you familiar with that?
Yeah, I was born in Taiwan, so yes, I am.
Oh, okay, perfect. So red envelopes. And what is red envelopes? It's basically money, dinero, whatever you want to call it. So if I'm invested in stocks and my stocks are underperforming, which Chinese equities have been doing, then what am I going to do? I'll probably sell it because I need to look like I'm an important person because, you know, Asians are about age hierarchy. So then what you need to do is you need to hand out a whole bunch of lucky money. So I love to share it because I've only discovered it in the last 3 years, is a great seasonality, which on my site, I call it moonfall because it's called Lunar New Year for the rest of Asia because we don't call it Chinese New Year because, you know, China is perceived as like the big bad. So if you just basically search on the Substack, I write all about like moonfall. So I use that as a seasonality. In fact, the very reason why today I'm saying that you're not seeing basically on Friday last week or February the 2nd, I can't remember what day it was, why you're not going to see like the S&P just go like this is because of even the downward pressure from, let's say, big economies like that of China. And that's another element besides the option pinning that I'm doing as well. I've learned, I got to learn this from guys at Man Financial. I don't know if they're still operational, but I got to learn a lot. I've been doing this for a long time. I'm not bragging here, eh? I'm simply just saying the approaches that I've used to devise an event traded seasonality, which is to think about downward pressure for Asian economies at this time. I don't think I've really heard that many people say it simply because of looking for liquidity, just like Wall Street gets bonuses on Christmas. But interestingly enough, we have what's called a Santa Claus rally. So what you want to do is you want to plan it out maybe a few weeks in advance and start to think about short China. And what's great about the short China idea is that it's down substantially over the last 3 moonfalls. You can see they're dated here. 2021, 2022, 2023. So, because I spent a lot of time in Asia, I was in Asia for about what, like 20 years as well. So I have an idea on how the economies are structured. They're basically the end game of the United States, and they're kind of similar to what you see in like Japan. So while America still has this little window of free markets, I'm going to be here probably, and I think that window will only be like 50 years as things start to change further and further. But yeah, so the long story short is that I'm only optimistic. If you think about it, Blake, is that why is the United States the biggest economy in the entire world? But why is it that when you're looking for market leadership, it's the NASDAQ, it's the S&P, they're leading. They always lead. I'm sure everyone in your audience has heard that Japan maybe has made 30-year highs. Well, what does that really mean? It means that it's been lagging the United States because the United States is at all-time highs. China's down substantially since then. That's the feature about what we had discussed about earlier. The ability for countries to make fun of the United States with its subprime crisis, because I'm from the Commonwealth. In Canada, we're quite like they're a little bit more conservative with their lending, for example. In Australia, that's why real estate is so big in these Commonwealth countries, Australia, Canada, England. But when it comes to stock market gains, they all lag. And I write about this too. I just wanted to share this one really quickly, is that people need to think about hard assets differently. I believe hard assets weigh down on the multiple. Your audience just needs to think about mining stocks and why they're always suppressed in terms of its PE ratios. There's a reason for that. It's simply because it's too connected to the real economy. And when you think about ideas of the fact that we're in some kind of like metaverse, the fact that technology companies, which are even have less hard like assets, for example, they're able to benefit from multiple expansion, from further financialization, as opposed to hard assets, which are too grounded. Because if it's so physical, it should almost be valued at like, 1 year PE or something like that. And that's the issue. So, and another thing is that commodity stocks, similar to emerging markets, seem like they're all about booms and busts. They're not about exponential growth. It's about capital flows that are important.
Well, Peter, there's a lot to unpack in this in your site. And so our traders, they just go to inversioninvestor.com.
Yeah, I think if they have a chance, like they should check out the videos and stuff like that. It conveys a lot of like the ideas. They'll enjoy like the podcasts. Hopefully I can get you on the podcast, Blake, as well, and we can share a whole bunch of things as well. And yeah, that's simply it. I hope everyone enjoys it. I believe in the fact that like I'm a big fan of content, for example, and I feel like what the finance industry is missing are outside thinkers that are providing perspectives that are conveyed simply without all this like wall speak, for example, and provide people with accurate precision. And as you know, most of the finance industry is a bunch of salespeople, and they have no idea about where the asset is going. And most big institutions now, it's not even their money. It's part of the managerial class. So only like basically family offices, individual investors are really truly concerned about asset price appreciation and being able to time it and being a stock picker. So this is a thing that people need to start to look into and understand in order to hedge themselves from the wealth divide that exists.
All right. Well, Peter, I want to thank you so much for spending your time with us here on Trader Summit. And I urge you traders, if you want to find out more information, go to inversioninvestor.com. Peter, thank you for your time today.
Thank you so much.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.